Within the last 3 years since I've learned trading, I'm now in a position to where I'm making anywhere from $10,000 to $20,000 per month using this exact same blueprint that I've been trading year in and year out. This is also the exact same framework that I give many of my students to helping them reach their first payouts and making their first $10,000 trading. In this video, I'm going to give you all of it. I'm going to give you guys the exact strategy that I look for on a consistent day-by-day basis. Then I'm going to teach you guys how to properly utilize risk management as well as trade management. Not only learn the strategy, but now you have a system in place that keeps your losses small but maximizes your overall winners. As well as towards the end, I give you guys a step-by-step trade plan as well as break down an exact trade that I utilized this morning to make well over $1,000 in the exact same strategy that I've been utilizing this entire month, which we're only halfway in and I'm already up over $18,000. So if you guys want to get the most value from this video, make sure you guys watch till the end, click the like button to support the channel. And if you want to trade live with me every single morning, as well as get access to me personally to help you becoming a much more consistently profitable trader, then you guys can click the first description and join the Spark Train mentorship. Now let's get into the video. Market maker model is a lot simpler than you think. It's basically the backbone of why price moves either up or down. Within this depiction, we can see price is in a market maker buy model, meaning price is finding support to reach back above higher prices, and then we reach a level to where price sees a reversal to go back lower into a market maker sell model, and it's composed of just these three positions. First, we have to talk about the smart money reversal. It's based upon price tapping into a higher time frame level of support or taking out a level of liquidity, and we'll talk about that a little bit more later on. But our first starting point within the market maker models is the smart money reversal. Then we can get into our low risk buy. Following the reversal, the low risk buy gives us the opportunity to get into the markets for the best R multiple. So if you're ever taking a trade within the market maker models, the low risk buy or the low risk sell up here is the best opportunity. And then last but not least, we have the accumulation state. This is when after we get that low risk buy, price will come back lower to offer a level of support before coming back higher, or it will offer a level of resistance off of this pullback to continue lower. And then off of that reaccumulation, there's also another one, right? So either price will come down into a level of support right here to find support to push higher, that's the reaccumulation, or we have another one called the inducement. This is when price creates this short-term low, which creates this reaction higher, but price comes back lower to take out this original low plus tap into a level of support before going higher. This is referred to as our inducement. We'll talk about inducement a lot more in depth later on, but right now there's two parts within the reaccumulation. Either a regular reaccumulation where price will tap into a level of support to go higher, or a inducement where price will not only tap into a level of support, but will also take out a level of liquidity either below right here or above right here. And this completes the market maker buy to the market maker sell model. Right, this is the buy side of the curve and this is the sell side of the curve. It starts off with a smart money reversal, price tapping into a higher time frame point of interest or a prominent area of liquidity to then get us into our lowest buy, to then get into our reaccumulation or our inducement to then end the market maker series. And now I'm going to break this down even more. So let's put all of this in action. Now that we know what the smart money reversal is and the lower buy and the reaccumulation and the inducement, how do we put this onto the charts and how can we actually trade it? Well, let's start off with our support and resistance zones. The first level of support and resistance that I like is the fair value gap. And the fair value gap is very simple. It's the difference between this first candle's high versus this third candle's low. And the separation between the high and the low here creates a gap in the middle referred to as our fair value gap, which we can see right here. Price creates this gap right here, which is an inefficiency within the markets, meaning that as long as price is bullish, price is going to come back down within this gap level to find a level of support to continue the overall trend. So this is a first level of support and resistance. Next, we have the order block. This is where price will create a last down close candle after taking out the level of liquidity followed by displacement. So let me break that down even more. So we can identify this low right here, as well as we can identify these previous daily lows right here. Price came lower to take out these levels of liquidity. After taking out these levels of liquidity, we see a strong push in the opposing direction. From this liquidity sweep plus this strong push in the opposing direction, this last down close candle is referred to as our bullish order block, which we can see price comes down into it to tap into that level to find support to push higher. This is also an order block right here. So we have these consecutive last down close candles right here. This is what's referred to as a propulsion block or a continuation of an order block, right? So this was the last down close candle that was the order block. Then we have these consecutive last down close candles that come down into that level to find support to push higher. When price creates this wick right here, which opens up, comes lower into these consecutive last down close candles, that's an order block right there, which you can see price finds support to push higher. So an order block can either be the start of the move, which is this reversal order block right here, where you have this liquidity sweep plus this break to the upside, or an order block could be a continuation of a prior order block, which we can see this order block found support, pushed to the upside, which it came down into this continuation order block to continue going higher. So either a reversal or a continuation order block. Last but not least, one of my favorite PD arrays that not a lot of people talk about is the rejection block. So we can see here the rejection block is very simple. We see that this body right here, this green body, is a lot longer than the body to its next, but the wick of this right candlestick, right, this down close candlestick, is a lot longer than the left candlestick right here. So we have this green candle, then we have this black candle. This black candle's wick is longer than the previous, but the body of this green candle is a lot taller than the next. So the separation between the highest body to the highest wick, this creates a rejection block or a level of resistance, which we can see price comes back within that level, tap into that level before we see this push to the downside. So we can see this was the start of the market maker buy model. Price came down into this fair value gap as well as took out this level of liquidity, and then we see this push to the upside. This first order block is our low risk buy. The second order block is our reaccumulation right here, which pushes up all the way back up into that rejection block. Have our support and resistance levels. Let's talk about some liquidity pools. So my first favorite type of liquidity pool is the previous day highs and lows. So we can see here we have the previous day lows, which price came down into to sweep before seeing this push to the upside. Most likely previous day highs and lows are levels of liquidity that price tends to come back into. And a lot of the times those previous day highs and lows could be the start of a market maker sell or the market maker buy model. Pay attention because we're about to break it down in a trade idea that I took this morning that made me a little over $1,000 using this exact same framework. So stick with me. So previous day highs and lows, area of liquidity you want to pay attention to. Next, we want to pay attention to prior session highs and lows, as well as Asia highs and lows. We talk about Asia and prior session highs and lows a lot during the breakdown, so I'll show you guys that as well. Next is 4-hour and 1-hour highs and lows. And then last but not least is equal highs and lows. So we can see here our full depiction is then framed from a market maker buy model with the buy side of the curve. And then we have the sell side of the curve right here. This is our smart money reversal. Then right here within this fair value gap, that's our low risk sell. And then right here, this is our reaccumulation. And then right here, this is our inducement, right? You can see price has this order block and it created this high. This high gives us a small pullback, but it wasn't really a lot. So when price came back within that same high point, it not only takes out this high level, but it also reacts off of that bearish order block, meaning that this is a high probability setup to reaching back below lower prices, and that's referred to as our inducement. So we went over everything from the smart money reversal to reaccumulation to a low risk buy and sell, as well as the inducement to frame our entire picture. I'm going to take you guys to the charts and I'm going to show you guys an exact trade idea that I took this morning using this exact same framework and how I'm able to trade this every single day. That makes me anywhere from $10,000 to $20,000 a month trading, and I'm going to give you guys the exact same trading plan that I use so you can achieve similar results. We can see we can click on these positions. We sold 5 right there. We scaled in 2 and then scaled in once again for another 5 contracts. So in total we had about 12 contracts within this trade, and we were able to sell the position all the way back down here for almost 20 points. making me a little over $1,000 on the trade day. And I traded this live with my trading team. This was about a 4-hour trade. How were you able to hold this trade for over 4 hours? I was able to hold this trade for over 4 hours because I have so much confidence within my trading. I've been trading for over 3 years every single day. I have thousands of hours worth of experience on these markets to where I can be confident in my setup. I knew it was going to come down here. I'm going to break down how I was able to buy at these exact lows, because as you can see, this is the exact low of day, and I'm going to show you guys how I was able to sell at these exact highs. And if you guys want to trade live with me and catch trades like these every single day with me and my students, then you guys can click the first in the description and join the Spark Trading Mentorship. It's a community that me and my brother have created to help traders just like you become more consistently profitable through daily live trading, 100+ hours worth of education, weekly webinars, and so much more. So if you're a struggling or beginner trader, I give you the steps necessary to help you become more consistent, then you guys can click that first description and sign up. I'm going to use the replay feature, and I'm going to break down this exact setup and how I was able to catch it. So every single morning with my students, I create a daily bias, and the daily bias is very simple. It's identifying where have we been, where are we currently at, and where do we anticipate price to go next. So we can see here that 9:30 is just about to open up, and just as 9:30 is about to open up, I want to pay attention to what happened the prior day, maybe the prior session, or anything that I should take note of. So on the 1 hour time frames here, we can take note of a few things. So we can see here that price came higher to take out these previous daily highs. If you remember, one of the most prominent areas of liquidity that I talked about was the previous daily highs and lows. So obviously this is a level of liquidity that price could potentially come back up into to see a reversal. Now that I have a potential area to where I can expect a smart reversal to take place, where do I expect price to go next? Obviously, we can take note of a couple things. So we have the London session here between 2 to 5 a.m. EST, and below the London session, we have these equal lows. Right, so we have the London session lows, which is in alignment with the equal lows. Equal highs and lows are levels of liquidity that price tends to take out a lot of the time. Not only do we have these London equal lows, but we also have these Asia session lows. Asia session is between 8 to 12 a.m. EST, so we can also mark out the Asia session lows, as well as we can take note of these equal lows as well. So just based upon this depiction, coming into a market was so easy because it just makes sense. Price has been in an overall uptrend where we can see prices creating consecutive fair value gaps, going higher and higher and higher. Even though yes, price is in an uptrend, price cannot continue going higher forever. Price has to come back to give a pullback, and as price is giving us a pullback before continuing the trend higher, we can capitalize on that short position. We can take note of all these lows as areas of what we call liquidity. From this equal low to these Asia session lows, as well as these equal lows right here, these are multiple areas of liquidity that can anticipate price to come down into, and price just took out these prior daily highs. So obviously this is a level to where we could see a resistance take place, and just below this liquidity pool, we can take note of this fair value gap. Right, the separation between this first candle's high and this third candle's low is a bullish fair value gap. So this is a level that's inefficient within the markets. So I'm anticipating price to find resistance within these prior daily highs, and if we can see price break away from it, then I can frame a short setup to take out these lows, as well as continue even lower down into this bullish fair value gap. Where have we been? We've been in an overall uptrend, but price cannot continue going higher forever. Where are we currently at? Level of resistance, which is these previous daily highs as a level of liquidity. And where can we anticipate price to go next? If we can see a break from this level, we can frame a short to reach back below these levels of liquidity and this fair value gap. Now I'm going to go down to the 15 minutes time frame. I'm going to break down the exact trade that I took. After taking out these previous day highs, I want to see if price is going to see a break away from this level to where I can frame my short setup to reaching back below these liquidity pools. We just opened up. We can see price saw one more spike to the upside. That's not what I was looking for, so I was a little bit more patient. And then after that spike lower, we could see price saw this massive drop to the downside. Following this massive drop to the downside, I actually sold around this level right here. and I had my stop loss back above these high points. If you don't know, my risk management strategy is pretty simple. My first trade is always with less risk but a bigger stop size. The reason why I use less risk in a bigger stop size is just in case of added volatility, right? Price could open up, come back up here, and then reverse. It could maybe just reverse right here. So I'm never going to go into my first trade full risk. I want to give price the opportunity to play around, and if it can give me a confirmation, then I could scale in. If price were to just go lower immediately, then obviously I would immediately scale in. But if price were to play around here, then obviously I won't scale in, meaning that if price did play around and stop me out, becoming a profitable trader is more than just strategy. And this is why a lot of traders fail. It's a component of everything, from a good strategy to good psychology to good risk management, as well as trade management. It's everything on a compilation of one that you have to consistently improve and get better at over time. This is what we teach our students over at Spark, and why we're able to see the best results of any other program is because we actually help our students and actually give them every single skill set, from risk management to strategy to psychology plus journaling, to help them becoming a much more consistently profitable trader. Someone who says they have a 70% or 80% win rate strategy is not going to help you become a consistently profitable trader. What's going to help you become a consistently profitable trader? By constant improvements and refinements within your edge, as well as yourself, building that experience over time. This is why we live trade every single morning. This is why we do trade breakdowns every single day for 100+ hours worth of educational content, as well as this is why we've built out a personalized journal for all of our students to track metrics, psychology, risk management, and everything like that. We understand if our students want to see the best success, they need the best tools and they need constant help day in and day out. So if you want to become a student and you're tired of losing in trading and you want to implement the same system that me and my brother have to becoming full-time traders, then you guys can click the first description and join. But now back to the video here. This was the exact setup. So as price comes back lower, if we can see a break from this level, I can then scale in and then reaching back below these lows. So let's see how this plays out. We can see here that price immediately went lower. So seeing this immediate drop to the downside, I was able to scale in 2 times. So the first time I scaled in with 5 contracts, and then the next time I scaled in with an additional 2 contracts. So my entry was back down here, and I adjusted my stop loss just back above this high point. And the reason why I adjusted my stop loss just back above this high point is because this is what we call a strong high. This was the high here that took out this level of liquidity, and then we had this breaker structure in the opposing direction, meaning that price should not come back above this high point. So as long as my stop loss is back above this high point, I'm safe. And obviously I was reaching back below these lows into this 1 hour bullish fair value gap. So let's see how this trade then plays out. We can see here price came close to stopping me out, but remember, this is a strong high point. Price is not going to take it out. It goes to show that these markets are really run on an algorithm, and if you can master and learn that algorithm, you can be a very successful trader. And I spent years mastering and developing this skill set, and I'm glad to be in this position to help you out. So as we can see here, throughout the remainder of the day, price has just been overall going lower, and then eventually came down into that level around 130. Let's break this down. This was that smart reversal at these highs when price took out that level of liquidity, followed by this drop to the downside. The low risk sell here, let's say you didn't sell right here, the low risk sell here was this last up close candle as our bearish order block, right? This was the last up close candle that took out this level of liquidity, followed by this break to the downside. So that's our low risk sell. Accumulation was right here by this inversion fair value gap. So this was a bullish fair value gap, but the moment that price broke through that bullish fair value gap now means that this is an inversion fair value gap. So this was supposed to be a level of support, which it did hold as support initially, but eventually it came lower to take it out. So as price breaks back below this level, price retests it not once, but it retests it twice to then go back lower. And then last but not least, our secondary accumulation was right here within this order block. So this was the last up close candle right here before seeing this drop to the downside. So obviously as price comes back within that last up close candle, it found the level of resistance to then give us that low hanging fruit, reaching back below these lower prices. perfect. But as you can see here, this does end up being the exact low of day, and this is exactly where the market is currently at, which you can see right here with proof that this is where we sold and this is where we bought perfectly, right? Some people are able to trade, other people are able to teach. I'm one of the select few people on YouTube that's not only able to trade and consistently make anywhere from $10, $15, $20,000 per month trading, but I'm also very good at teaching you guys how to trade so you guys can achieve similar results. And I have many students that's already achieved well over $10,000 in payouts. So if you're a struggling or beginner trader and you want to hit your first payout or make your first $10,000 trading, which is more than doable and easy with systems that we show every single one of our students. So if you want to learn that exact system and trade live with us every single morning to reaching that specific goal or whatever goal you have in mind, then click the first in the description and join the Spark Trading Mentorship. That's going to be it for the video. I hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.